Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst for the last 14 years. Bear trap overnight. We closed at the lows yesterday, but futures bulls taking us higher for a gap up open. New all-time highs in the S&P 500. A lot of green out there as the dust begins to settle from the FOMC reaction. Let's see where we stand in each of our major sectors. So we talked about all the resistance rejections yesterday in the video, but we also made note we're not breaking any supports at this point. And you look at the S&P 500 futures from yesterday, we had the low of Tuesday. The low of yesterday got right to that level. We had a little bit of a dinky bounce underway at that point, and then it was nothing but up overnight. And you can see we're just riding an hourly uptrend, hourly EMA 12. And what stands out is the SPY daily stair-step pattern. We now have a higher low every single day, 6 days in a row. Nothing changes if that pattern remains intact. When we lose the daily stair step, we have tons of space for a daily higher low. The bulls ideally want to hold a back test of previous resistance, now support, and we're going to watch what's the response to first hourly oversold conditions. Does it mark a daily higher low, keeping bulls in complete control? But we've got all-time highs 3 days in a row, and as far as I'm concerned, that's the bulls telling us they're still in control. And again, bigger picture, my guide is just walking it up with these higher lows, and as long as weekly higher lows are intact, absolutely nothing changes from full bull control. NASDAQ futures chart broke our wall of resistance overnight. And again, bear trap in the sense that we closed down right at that low, and I even had some hedge position on. It's the kind of thing where, again, keeping that bull lean, I wake up from where we closed, my hedge position's down a 2-day loser, but then my IRA is up a week maker. And so those offsetting each other as far as exposure. So took some hedge off, but we'll wait for the S&P 500 daily consolidation to take a bit more off, but definitely a lot more long leaning than short leaning at this point. The NASDAQ is testing weekly resistance at this equilibrium. QQQ technically broke it, but with no follow through. That resistance was 485.54. We broke it by less than $1. The adjusted futures chart, adjusted for the contract rollover, also rejected from resistance. So still a little bit more proving to do. What I want to see next time we backtest it is QQQ holding the 477's support zone. Previous resistance, now support. So any pullback, S&P 500 gets daily consolidation going and the NASDAQ joins, got to hold that back test as it was such a clear battleground that has now shifted with that bull break over it. One thing I want to talk about, little trade review, is just, you look at today's action and on the gap up open, the bulls controlled the morning. Who's buying up here? Number one, it's some shorts being forced out, absolutely. But me, I was going long today. And it's just waiting for a risk reward setup that is favorable. And of course, I would rather be trading with the trend. It's a lot of people, they see the open this morning, the gap up, and they want to short SPY or Meta or these names in blue sky. And I just cannot stress enough that shorting blue sky names is not a good long-term strategy in terms of making money in markets. It's much more favorable to go with the trend. But anyways, here's where I went long. So keeping an eye for QQQ, weekly resistance to break and then go into hourly consolidation, watching for it to lack follow through. And that's just essentially because, okay, now the NASDAQ's up 3%. You stop out anybody going off that level. Now who's left to buy? There's not many people. And that's what started that hourly consolidation. But I was playing sucker punches. Remember our sucker punch webinar, Google Chart Guys Sucker Punch, because I'm still using these clues here. If you're coming right off an all-time high and you're just dropping really hard and fast, so the QQQ 15-minute uptrend is nice and clear. I'm still buying sucker punches as long as the longer-term time frames are in an uptrend. And I said that a little bit after 1150. So I was talking about this move right here. We went right from the high, testing that high, and it was just a straight drop. And I knew a 15-minute higher low compared to 482.59 was the most likely scenario. And so I watched that hard and fast 1-minute drop, and I long it. And I go long off that level, and I'm filled at 70, 74 on TQQQ. And into that little 2-3 minute bounce, I sell half of my position. Now my break even is, forget the numbers, 64 or whatever 64, 70, 64. So 10-cent little flip. That trade doesn't mean anything to me, but now I set my stop. I missed stopping out. I'm showing the QQQ chart. I'm talking about TQQQ. Missed stopping out by 2 pennies here, and then we run up to higher highs. And so again, it's just playing the 15-minute trend. So stop under the low. That is either the 15-minute high or low, or I will stop out for a negligible loss. Smaller position size because there's a clear resistance level that everybody's playing off of. Just missed my stop out 25% more. I either stop out or sell the rest on the new high of the day. I ended up having to leave. I sold right up at the high of the day. That's not a meaningful trade. That's, a third of a day maker, but it's just trading with the trend. Even if we're extended, I'm just playing off of the clear 15-minute uptrend. Again, at that point in time, that's the most clear time frame for me. We bounce, we hit the low on the morning, bull move up, 15-minute higher low off EMA 12, 15-minute higher low, 15-minute higher low, and then you lose it and you go into hourly consolidation. So that was one trade where, again, yes, we're extended, yes, we gapped up, but I'm zoomed in and I'm on the 15-minute time frame, and there's a trade there for a 15-minute higher low. Finally got the weekly higher low set on semiconductors, SMH, still space. Anything under 253.32 is just a lower high. So again, I know the NASDAQ is probably not going to go very far if SMH does not break 253.32. And that level is still 5% away, 4 or 5% away. So watching that closely, because again, I'm not, the sectors right now that have proving to do, we got XLF trying to be a bull flag off all-time highs, XLV trying to be a bull flag off all-time highs, IWM breaking weekly resistance. Not a lot of follow-through, but SMH has the most proving to do for the bulls, and the NASDAQ has the second most proving to do. And so keeping a close eye, just in case there's any red flags. I need to see, you can see SMH on the daily here, continuation. NVDA doesn't have that continuation yet. I need to see NVDA get that bull break there, because if it doesn't, again, if NVDA and if SMH do not break weekly resistance, the NASDAQ is going to break weekly resistance and pull right back and not go very far at all. So even if I'm not actively trading the semiconductors and NVDA, they are a top watch for me as a key clue, a key piece of the puzzle for the next week plus, because it's got to join. We can't have it being a dead weight holding things back as far as the NASDAQ is concerned. XLV still sideways. It was green today, but not much going on. Past 3 days topping out right around the 157s, so a little short-term resistance zone. XLF tested all-time high today, failed by a couple pennies, but it's clearly one of the strongest major sectors out there. Trying to confirm that weekly bull flag to new all-time highs. IWM opened right at the high of yesterday and saw a decent little drop there. Ended up dropping maybe 1.5%. So still not a convincing breakout. Yes, we broke weekly resistance, but need to get up to that highest level. That's not all-time highs. That's the highest level we've seen in years. Need to get back to that level. Ideally, we need all-time highs. If you're going to be talking about blow-off top or, longer-term top in the market, you want to see IWM and small caps running as well as a bit of a dash to trash there. A lot of people are talking about 50 basis point cut. The last time it happened was this exact date in September in 2007. And it's definitely worthwhile to look back at historical examples, but I will be completely honest, I am not looking back at rate cut cycles at all right now. Why? Because I have full confidence that the charts in front of me that I'm trading and that have been giving me nice clarity for the last year and a half are going to tell me if anything is shifting. I don't want to develop a bias by looking back at data from a decade or 15 years ago when I just have price level trends. And that's just as simple as I can make this game. And if the price level trends break, okay, then maybe a long-term top is being set. Then maybe the market is going to crash. But if we do not break the weekly supports, we're not going to drop in any meaningful way. It's just as simple as I can make my overview of the market. And, people looking for hidden divergences and the past did this, and I get it, but there is also, it's a certain degree of overkill where, if I don't have clarity on a weekly trend or a monthly trend and it's choppy, okay, I'll look around for other things and other clues to try and get my bearings, but it's just as clear as can be on the NASDAQ and S&P 500 with these weekly supports. I mean, we will not go down unless these levels break. So I remain a bull until they break. I know I keep repeating myself, but I just keep having these people, messaging me or asking me or like shorting and being bearish. And I just can't fathom being bearish at an all-time high. It's literally as strong an uptrend as you can have is when you're in blue sky breakout all-time highs. And, protecting is fine. You want to grab hedge positions. You're not comfortable, whatever, that's fine. But being bearish, that setup just doesn't make sense to me. XLV, we did it. XLF, we did it. IWM. So IWM daily inside bar. XBI, I traded long today. So I just wanted for the potential, if we break this, multiple year high and unadjusted, I should say, we double top to the penny. And so I made a long entry. I got a good long entry on this initial drop into 5-minute oversold. And then I was just constantly scaling out. And, we reject to the penny from resistance. I exit some more. We reject again. Well, we might just form a 15-minute equilibrium. I exit some more. And so now I'm just down to a very small swing position, but it's still a top watch for me because, again, if XBI can get over that level, we are then at the highest price that we've seen in 2.5 years, which, again, is a significant period of time. And so just watching for that possibility of that breakout. PayPal, beautiful follow through. Shout out to Lamont. Lamont and I both liked the setup for a PayPal long on the back test of this previous resistance for the swing report. And Lamont gave the target of 78. And so it hit the target today. Entry zone was 68s to 63. We dipped down to 66, 67. So it got to the top of that entry zone, held weekly EMA 12, and then got to that target. So the relative strength stood out yesterday. Bulls took full advantage of that relative strength today. And again, now we're at the highest levels that we've seen in almost a year and a half, pretty much. And so trying to put in that long-term bottom, next key level, 88.63. So things opening up a little bit as far as previous resistance levels are concerned. And now a lot of space for a daily higher low. Again, next consolidation. So keep an eye on hourly oversold for PayPal. Looking for a daily higher low. Dollar, still weak with another daily lower high trying to shape up. So gold and silver recovered a bit from yesterday. Gold daily inside bar, highest close ever, trying to shape up here. And silver, double top essentially with the high of yesterday. But again, nice recovery. Pretty much everything had a nice recovery after that weak close yesterday. And oil, adjusted for the contract rollover, still just a daily stair step. Again, we got plenty of space for a daily higher low now, but just every day bounce following through a little bit more. So overall, what would best case scenario be from here? Obviously, when all of our major sectors are going up together, it's ideal. Today, that wasn't the case. Yes, everything was green, but from the open, it was clear NASDAQ and semiconductors were the bull leaders, and XLF and XLV pulled back a good bit on the morning. But, I want to see XLF and XLV confirm their weekly bull flag to new all-time highs, of course. But again, it's just semiconductors. The market can go up without the semiconductors, but it won't go up with power unless the semiconductors and the NASDAQ are breaking and making their move back towards all-time highs. Because QQQ at this point, that all-time high is still 4.5% away. So there is still work to be done. So again, I'm bullish, but I put on my bear glasses and say, okay, if there's going to be red flags, it will originate in NVDA and SMH on this current move up. One day at a time. Bears are not sneaky. We will not see any meaningful top in markets without all major sectors, QQQ, XLF, XLV, hitting the lows at the same time for many days in a row. Now, it doesn't have to be in a row. For many days, showing money leaving the market. But when you've got so many sectors, utilities just hit all-time highs, weekly stair step on XLU for 3 months at this point. That's going to pull back probably pretty soon. Maybe even the temporary top is in. When XLU pulls back on the weekly, do we rotate elsewhere? Do we see other sectors make their move? Here's XLI, industrials, all-time highs. There's just so many strong sectors out there. Real estate's been real strong. Let's see. So XLU and XLRE straight up for 3 months on the weekly chart. Let's now see if they start weekly consolidation to end September. And maybe semiconductors can benefit and catch a little bit of a bid again. if you're telling me I have to short something, I'm watching semiconductors because they still have resistance, but I'm looking at these 12-week stair-step sectors, XLRE and XLU. They are very due for weekly consolidation. They've just been riding daily EMA 12. Watch for daily EMA 12 to be lost for the first time in 2 months to tell us things may be shifting. How would I make an entry if I want to short? I look for a daily bounce. I scout a daily lower high. I stick my stop over the high. I say that's either the daily lower high and we're about to confirm the daily downtrend into weekly consolidation, or I'm wrong. And that's a really nice risk reward setup. This is all on the fly. I haven't looked at these charts in a long time, but I'm going to pay attention a little bit more now because those names are very due for weekly consolidation. All right, we'll see. Do good things. Hope you're well. I don't have any content here at the end of the video. Just imagine really cool stuff.